And good evening. This is the Elliott wave update for the S&P 500 and the NASDAQ 100 for Thursday, December 29th, 2022. 1 day left, 1 day trading, one trading day left for 2022. And that, of course, is tomorrow. And it's not getting any easier, but I will say that what it does tend to continue to do is hold within parameters for both sides, as I have been presenting, and keeping alive all the different variations of labeling that can be applied to the current move. So what actually I think is going on, I'm going to start here with the S&P, is that the market did finish minor wave 1, remains within a minor wave 2. We sort of if challenged that low, and this low would be the December 22nd low. Yes. And from that low, I believe we've done an A, we did a B, and now we're in that C wave. And if I pull this open, let's see if we can take a look inside. Let me get this open that way, bring it down a little bit so we can take a peek on the inside here. So if that's 1, ABC A of minor 2, ABC B of minor 2, and now we're in the C wave, which looks very clear to me that it's 1, 2, 3. This is the 4. We're closing our after-hour session with the market moving lower, I believe, in a small 4th wave, and that we're likely going to have a 5th wave. I think we definitely need to get ourselves back above this 39.20 level. But I know we have resistance at, if we go just by, actually we can now. If we're going to take a peek at what we think the C wave can be, yeah, we can do that. Because we can go from there to that high to that low. So what we got going on, 39.16, we needed to get above there. There it is, 100%. Wave C would be equal to wave A at 39.16, and it truly would be basically a flat. Not quite making it to the bottom, just overshooting that top by an equal amount. So it all fits. And the market is definitely continuing to decide where they want tomorrow's expiration to be, not only for the SPX, which continues to have that gigantic play sitting around 38, 35, basis the SPX, basis the cash market. So what we get to see tomorrow is the ES options fall into line very directly with the I believe, the SPX. And then as adding the premium for the future will decay a little bit more. So for us, it was bigger, but we'll see that start to come in a little bit more. So we may not get to this level as would be expected, but we should probably get to here. Failure from this level keeps this whole scenario going for a while longer. There is a different one where people are suggesting to me that the third, and this is all a part of a very big 4. And I have to say, while the validity of the pattern remains, the thought that the wave 4 would be massively bigger than the wave 2 and move to a new low, et cetera, et cetera. So that I see the triangle for sure. And if anything, it could be a B wave. And we still have all, so this would A, B, C, D, E, down. Then if we're, it would point lower. But that's based on that this, not this line, this is a B wave. And I'm not necessarily counting that way, but that's the only way we could keep it alive. I think it also fits very cleanly as a minor wave 2 and still will fulfill the requirements under Elliott, so to speak, by the C wave going above the beginning of the A wave. So again, this is 5, and then we have A. So excuse me, this is where I meant. And this is B and then C. And the expectation for the C wave, it will take out that high. And that high is just right at 3,900. So 39.16 does the trick. And I think we will have our 5 waves up in a C wave. Now, going over to the NASDAQ, and then I hope you guys will hang on because I want to have a little bit of a conversation about mindset. So, first of all, again, tomorrow, I think the markets, first of all, Tesla, once again, and let me just double check where that came in. Tesla goes out trading 219 million shares again today. Yesterday was 222, today 219 million. Humongous volume in Tesla, humongous volume. It is now happening where we're seeing those that want out are getting out, but they're finding those that want to get in are getting in. And buyback in. But so much of it right now is rallying around or moving around according to, and I need to show you this because these numbers are pretty incredible. 168,000 of the December 120s, almost 170,000 of the 125s, 93,000 of the 130s. These numbers are huge. 109,000 of the 115 puts traded, 76,000 of the 110 puts traded. If you're quick enough and you can handle it, with the premium being as high as it is, volatility being as high as it is for tomorrow, and then also next Friday, a week from tomorrow, the volatility is still pretty high. So this all could get rolled out. In any case, the reversal conversions are there. And trust me, there are algorithms that are programmed very cleanly to do those trades. But they have to get one side filled and then the other sides are done automatically. And you can sit out there and do that all day long at the prices that these things were trading on, this volatility. You're basically putting on a totally neutral trade that has no monetary risk with wherever Tesla wants to go, based on how you synthetically put it together using calls and puts in the underlying. So you have no gamma risk, you have no delta risk, and it's just a done deal. And you throw it in the pile, and you can see if it hasn't been taken today, then you should go tomorrow. So that being said, I suspect we're going to continue to see very large volumes across the board, and much of it is likely being rolled. So 20,000 of these the week after the 120s, 168,000 for tomorrow, and 20,000. These are incredible volumes. So I suspect that Tesla's going to remain in play until all of this is settled out. So there's a whole huge chunks of stock, 200 million shares, I believe, gets settled. At least 200 million. Yesterday and today, with 400 million shares of stock gets settled if it hasn't already started. So that's a lot. It's a great deal. Now, I'm coming back over to the chart for the NASDAQ. What can we expect? Well, I'll tell you, if I'm looking at this, and then this is all going to be a part of a minor wave 2, and the reason that I continue to allow it, I know it has broken that low, and it did it by a fair mile. But let's just take a look and see if it really, what we want to do is we just want to look at, we're just drawing for the B wave. I just want retracements. And those retracements go from that low to that high. And it's, yeah, that should work. Now let's open it up. 1.382. So it exceeded it by a little bit, but the for an irregular B wave, you have 1.382 and 1.618, and these, and it sat right in between them. I mean, it's actually 1.236 and 1.382, but it can get pushed to 1.618. It did not this time, but it came close. In any case, I am basically looking at it, trying to decide what it is. And I am now going to be saying that this is the A and this is the B, and we're in the C wave here as well. Now, again, what could we expect from that C wave? Well, if we got the irregular B, then the corresponding is that the C wave will be equal to 1.618. And that's up at 11,267. Now, I suspect that we need to get back above 11,197. So basically 11,200. But that would kick it. That would do it. So we got 1.382 at 91, 92. Well, what's another 8 points between friends? So if it got there close, it's going to be more. It's going to fit. And today we got it to 11,072, which was where the C wave was equal to the A wave. We hit that today. And so if it all comes to a screeching halt, which I don't think, I think we have one more to go inside this C wave. Oh, I'm sorry. Let me open this up and bring it up this way, then bring it back down so we can take a look at what do these internals look like. Wow, see, pretty. So either that's, it's like 1, 2, and then we get a 3, and then an ABC, then we get a 4, maybe down back down to 11,000-ish, and then we get a 5. And that fifth wave should carry us up and finish this minor wave 2. So again, still holding to the basic premise that, coming into next week, it shouldn't be very pretty. But again, we've had to deal with massive adjustments going on in Tesla between those that want and those that don't. So we're seeing a lot happen right there in that stock, and it's getting set up for next year. We had somebody, I believe, over at Morgan Stanley, even though it was a downgrade, downgraded the stock, his stock price, from 308 down to 250. And they jumped. Because there's still that mentality. And I will be honest with you, we're looking for the bottom of a cycle A wave between now and probably within the first quarter to first half of 2023. And after that, for a solid rally. Tesla may have seen it slow already, and then now getting ready for it to put in a fourth wave. And in fact, not just to make this go any longer than it should, but this update, we're looking for an ABC. We kind of got it. But let me open this up just a tad. What we're looking for, boom, that was on yesterday's lows. I'm going to remove that. And what I'm thinking is that if we're really putting in a retracement rally, it would have to be here. To be totally honest with you, it has to be this high, because this is still an ongoing. So this would be 1, 2, 1, 2, 3, 4, 5, and that's going to finish this 3. So we're almost there. Now I'm just, come on. I'm just going to add fibs. So a fourth wave from here, 126.236. If we're looking for another stronger leg down, I'm not looking for a super strong rally at the moment. I think we still will get up here, maybe a little bit higher. We were above there. What was the high today? 122.58. 123.57 was the high. So that is Tesla. Now back over to the NASDAQ. Sorry, this is longer than I expected. We're going to finish this, and then I think we start the next level, which is that minor third wave. Now, tomorrow, probably not. I think we end on a higher note tomorrow in all the markets, because it's just the way they want to close out the year. Because now it really is a marking session to get things into place so that fund managers and portfolio managers and individual traders, or whomever has to make a report, can make that report on what did well, what didn't do well, and the adjustments that have been made to the portfolio. So that's going to be a lot going on tomorrow as well. So in any case, I think tomorrow we do finish up, and then I'm going to start to look for that larger decline in the way of a minor third wave, and that would be of the intermediate third wave to begin. Now, real quick on mindset. On mindset, we can't allow what happens. Most of us come in with a plan of action. We've done our analysis. We figure out what we're going to do. We figure out how we're going to trade, what we're expecting the market to do on that day. And if within the first half hour, that whole picture gets flipped and we attempt to trade, but really against what the market's already telling us it's going to be doing. So the mindset can be knocked off kilter, because you take a trade, suddenly you lose. You lose a chunk of change instead of make a chunk of change, or you hold on to the trade that's now working against you because you feel your scenario is going to come in. So let this fluff, let this happen, and then we're going to find out, and it doesn't. It just keeps marching in one direction. And you're getting buy signals, but you're choosing not to take them because you're focusing on it's going to turn, it's going to turn. So once your mindset is broken, it can take a while because now you're not focused on the trading. And the market always is going to tell us what its intents are, whether those intentions are for 15 minutes, 5 minutes, or an hour, or the day. We will get it. And today we had to look at the inside to the components. But as I discussed yesterday, I discussed and broke down Tesla, as I'm doing again, because it is in control of a great deal of what percentage of these moves it's contributing, even just on the moves that it's making. So in terms of, $100 stock, $9 move, it's moving 10%. So any case, just be ready. So we've got our markers where we think the C wave can come in. Talked a little about mindset and how we kind of keep a strong mindset so that we can continue to trade. Do not be afraid to take what the market is telling you. Remember what your goal might be. All of our goals are to go in and make our money and be done. So we have a plan of action. Don't forget that if there's 3 parts to putting in that trade. First is the trigger. The second is the target. The third is where the trade becomes invalidated. And it doesn't mean you're wrong. It doesn't mean that the scenario is wrong. It doesn't mean that the strategy is wrong. It just means that right now, the market's not doing that. And then you can see, if you step back, if you're out of the trade, you can take a step back and go, oh, you know what? I got a different signal right there. And look at I'm getting one right there. So it can get you back into the market versus now looking at a P&L that's going down because you're on the wrong side. All right, I am going to end it there. Our next update will be on Monday, January 2nd, after Globex begins. Have a very, very happy and safe New Year. I will be putting up an Eye of the Storm, so a podcast, big picture review of 2022, walking into 2023. And also, I'm going to take a little bit of a deep dive into inflation. And there are comparisons between the 70s to 80s to the last 2 years, basically, for us, because that's when our inflation skyrocketed. Okay. Have a great and safe new year.